So you want to be a landlord. Time to learn a little bit about landlord insurance.
Good call.
I'm Justin.
And I am Aaron.
And this is Insurance Hacks, where we take our decades of industry experience and help you hack your way through the jungle that is buying insurance, and in this case, specifically buying landlord insurance. Now, landlord insurance has a couple different names.
Most often it's called dwelling fire. That's an industry term. It's called a dwelling fire policy is what you want.
Right, but we figure landlord's what you're Googling for, so we'll start there.
Yeah, many companies use landlord as the name of the policy just from a marketing perspective. It's easier. But what's important to remember is that if you have a house and you're going to rent it out to somebody who is not the owner of that house, it needs to be on a different type of policy than your standard homeowner's policy that you would buy.
For sure.
If you switch it somewhere along the way, change the policy.
Yeah, I can't tell you how many times I've seen people who, oh yeah, I've been renting this house out for years, and it's got the homeowner's policy they bought when they purchased the house on it. What's going to happen if that goes on?
So that violates the terms of the policy contract. In the contract, it says losses will be paid when the primary title owner is occupying the home. That's why you need to get a dwelling fire policy, because it removes that language and makes sure that when there are losses, they are covered.
So with a dwelling fire policy or landlord policy, is there more coverage than a home?
Depends. It's about tailoring the policy to the risk that it is representing. A lot of times there's less coverage.
Okay, so
in certain areas.
So it must be cheaper then, right?
No, because there's a lot more risk when somebody who doesn't own the house is living in it. They don't care as much. I mean, come on. Tenants don't care as much as owners of houses do.
That's true. I mean, I think we've all heard the joke about drive it like a rental car, and I think kind of it comes the same way with having a house that you're renting or apartment that you're renting. And really, as a landlord, as the homeowner, you have to protect yourself from that. Tell me about these different risks. What's the biggest risk, really, with a dwelling fire policy?
Well, it is
being a landlord, really.
Yeah, I mean, it's that tenant really not knowing what's going on there. You know you're not going to do something stupid to destroy your own house, but you cannot guarantee that your tenant won't do the same thing.
Right.
There are good tenants out there, to be sure, but there's a certain level of pride of ownership that goes into owning it. You got a dwelling fire policy. That's what you have to have. It's really important. And then you've got to determine what is the right type of dwelling fire policy for you, because not all policies are created equal, and also not all tenants are created equal.
That's true. That's true. So tell me about some of these unequal things.
So tenants, it really depends on whether you've got a long-term rental, a lease that goes at least 6 months, but usually that's going to be a 12-month lease or more.
Sure.
So that's a long-term tenant. Then the other type of tenant is your short-term rental. That would be your Airbnbs, your VRBOs, anybody who's renting really for a period of less than 6 months. That means you are doing a short-term rental, and there is a difference because not all dwelling fire policies will cover a short-term rental. Again, policy language eliminates the coverage, so you have to get the right policy that has the right policy language for what you're doing with your property.
So we have a little more limited coverage, right?
Yeah.
So
I want to stop here and point out that yes, there can be premium differences. A long-term rental policy may be less expensive than a policy for someone who's doing short-term rentals. And as a consumer, it's real enticing to get the cheaper policy. But it's important to get the right policy, because no matter what you're paying for, if you are misrepresenting what you're doing, you stand a chance of getting no money for that claim, which is a big waste of money on your premiums.
Especially in today's market, you stand an even greater chance. Insurance companies are no longer messing around with, well, we'll get you next time. So let's talk about that coverage, okay? So we have a homeowner's policy which covers the structure, okay?
A dwelling fire policy covers the structure, yeah.
Okay, covers structure. Is covered the same way? From a risk standpoint, right? There's lots of nuances, but let's talk big picture risk coverage.
Yeah, I mean, mostly, again, you got to choose your right coverages. Make sure you're getting a replacement cost. A dwelling fire policy, a standard dwelling fire policy, has 3 different levels of coverage.
Okay.
You get the DP1, so a dwelling fire, just dwelling property 1. So DP1, which is the most basic level of policy. The DP2, which is a better level of coverage. And then the DP3, which is the best level of coverage. What do I mean by better and best? It means, do we have replacement cost, which would be better than actual cash value?
Okay.
It means having coverage for fire, lightning, wind, and hail, but then you're going to add on things like vandalism, malicious mischief, those kind of things that tenants might actually do. And then you go to the next level, the third level of policy, and you're going to be able to get things like replacement costs, but also loss of rent.
Okay.
And coverages for that vandalism, the malicious mischief, maybe even special bells and whistles. I mean, I've seen foundation coverage, water damage coverages that you can get into the third level of coverage. So if you really need your policy to pay out at the time of loss, get the best coverage you can get, which would be that DP3, that dwelling fire 3, the best level of coverage.
I know this sounds like insurance guys saying drink my Kool-Aid, but really, whenever you're dealing with a landlord type policy, don't start from what it costs. Start from what you need and then decide if it's worth what they're asking you to pay.
Yeah, because there are good reasons that people carry a lesser amount of coverage.
Sure.
The best reason is that you can afford to pay for your losses mostly yourself.
Is this a hobby? Do you have one? Or do you have a dozen? Because that should affect the type of policy you're looking at. My assumption would be if you have a dozen, you're looking for disaster coverage.
You can spread that risk better. You're like an insurance company.
You bet. Absolutely. You're insuring against your own risk.
Just like the stock market, if you only have one property and you have a lot to lose if that property becomes really unprofitable one year because of some type of loss that you suffered that's not covered by your insurance, or the insurance company doesn't pay enough for, don't skimp on how much you're paying for that coverage, because when the disaster happens, you can lose a lot of money.
Right. And remember, your tenants aren't going to say that you're paying too much for insurance. We're not paying that. Pass that cost on and be smart about it. You know, I am involved in lots of insurance investor groups online, house investor groups really. And one of the terms that I hate the most is investor friendly, because that means cheap. I get it with some things, but really with insurance, don't go investor friendly unless you are a large investor. Don't try to play with the big boys if you don't have the big bank. So let's talk about some of the other coverage that are important on a dwelling fire policy compared to your home policy. So personal property. On your home policy, your stuff is covered.
Right? A lot too.
A lot of it.
Usually you have, you get 60% of the dwelling coverage.
Which is a lot.
It's a lot. I mean, if you got a $200,000 dwelling, you've got $120,000 worth of personal property on your homeowner's policy. But do you have $120,000 worth of personal property in your rental property?
Right. Most likely not.
No. But do you have none?
Most likely not.
Yeah, you've got appliances in there, and they could get stolen. Your tenant that you evicted could take your appliances for all you know. Get some coverage for the things you do actually own. If it's fully furnished, make sure you've got enough personal property to cover all of the furniture you got in that property.
Okay. So the other coverage that I'm concerned about, I say that. The other coverage that I really want you to be concerned about is that most important one in my mind, the liability side of it. So your home policy has liability coverage. How does that work on a dwelling fire policy?
It depends on who your homeowner's insurance company is, because you do need that liability coverage on the dwelling fire.
Right.
And some insurance carriers don't write policies with liability on the dwelling fire policy. It actually has to be extended from the homeowner's policy onto the dwelling fire policy.
Okay.
So be careful of that. Make sure when you look at your coverage that you do have liability coverage on that policy.
Right.
Yeah.
On a side note, one of the other things that you must have if you're a landlord, you just need to do it, is get an umbrella policy that does extend extra coverage beyond what your homeowner's policy offers, or even beyond what the dwelling fire policy offers.
Yeah, there are some companies out there who just really focus on the dwelling fire policies, and they'll even do a policy with $1 million of liability, and that's nice to be able to separate your liability from your house, so you don't end up with some of these claims on your primary policy.
Right.
So another thing I want to talk about, we're talking about dwelling fires here. We're talking about, do you have one property? Do you have a lot of properties? So with one property, go with the dwelling fire policy, get the right policy, get the coverage that you're okay with, that works for you, that's going to pay you what you want to be paid at time of loss.
Right.
You got a lot of properties, maybe 4 or 5 properties, you might be still in that get a few dwelling fire policies range, but depending on what kind of risk you're willing to take on, you set the policy up how you want to. But the other type of policy that you should consider if you are doing a lot of real estate investing, if this is not a hobby, but this is your business, there are policies out there that are called a scheduled policy or a monthly reporting policy. that you can get, and the rates are competitive. But what it is you put all of your properties on the one policy, and you have one bill. It's a monthly bill, and you can report the kind of property you've got. This is great for people who are flipping houses, who have a lot of landlord inventory, but maybe they do get rid of some here and there. You can even add coverage for some policies. You can add coverage for your tenants, and definitely get your liability as well.
Right. Lot complicated here. We cannot solve all of your landlord insurance problems in 12 minutes. However, what we can do is answer any more questions you've got in the comments below. If you've got enough questions, we'll make another video for you and answer them one by one. Happy to do that. We're always happy to guide. How do you do a landlord policy? Really, you work with a professional. So subscribe for more broad information like this. Make sure you follow us for all these things. And we want to thank you for watching. Thanks.
The Phoenix Insurance for you.